Bitcoin today is no longer just a digital coin, but a battlefield where global finance, politics, and power intersect. And whenever Donald Trump's name is connected with Bitcoin, the market reacts with fear, hope, and extreme volatility. Trump initially criticized Bitcoin very strongly, calling it unreliable, dangerous, and a threat to the US dollar, because he has always believed that the dollar represents American dominance. But over time, his perspective began to shift, not because he suddenly loved crypto, but because he understood its political and economic weight. Trump is a businessman first and a politician second, and he never ignores a market where billions of dollars and millions of voters are involved. As Bitcoin adoption increased among young Americans, traders, and tech investors, Trump realized that ignoring crypto could mean losing influence and support. He saw that banning Bitcoin outright would push innovation outside the U.S. and strengthen rival nations like China and Russia instead of protecting America. So his approach evolved from rejection to controlled acceptance. Trump's real concern has never been Bitcoin itself, but control. He does not want a financial system that operates completely outside government authority, but he also understands that trying to destroy Bitcoin would damage American competitiveness. That is why Trump's vision around crypto revolves around regulation, taxation, and dominance. He wants crypto companies, exchanges, and large traders to operate under U.S. rules, pay taxes, follow compliance, and remain inside the American financial system. For traders, this creates a double-edged situation. On one side, Trump's involvement gives Bitcoin legitimacy and long-term survival because a total ban becomes unlikely, but on the other side, stricter regulations increase short-term fear, volatility, and shakeouts. Trump believes that if crypto is going to exist, then America should lead it, not chase it. He wants Wall Street institutions to control liquidity, American platforms to dominate volume, and the U.S. government to monitor large capital flows. This means sudden policy statements from Trump can create aggressive pumps and dumps because traders react emotionally. Before understanding the long-term intention, Trump also understands market psychology. He knows that his words alone can move billions, and that gives him leverage during elections, negotiations, and policy debates. For crypto traders, this means one thing: volatility is not a bug. It is a feature. Trump's stance creates uncertainty, which is exactly what produces trading opportunities, but also heavy losses for emotional traders. Smart traders do not trade headlines, they trade reactions. Trump is not promising freedom to crypto traders, he is offering survival under authority. If Bitcoin aligns with American interests, Trump will support its growth. If it challenges dollar dominance or escapes regulation, he will pressure it using policy statements, investigations, and tax rules. Therefore, Bitcoin under Trump is neither fully bullish nor fully bearish. It is controlled chaos designed to benefit institutions first and disciplined traders second, while weak hands get wiped out. This is why understanding Trump's mindset matters more than reading indicators, because when politics enters the market, to understand what Trump really plans to do with Bitcoin traders, you must first understand how he treats markets in general. Trump does not aim to create stability. He aims to create leverage, and markets become leverage when they are emotional, uncertain, and reactive. Trump has always used uncertainty as a tool, whether it was trade wars, interest rates, or tariffs. He creates pressure, waits for reaction, and then positions himself as the decision maker. Bitcoin fits perfectly into this strategy because it is already volatile and highly sentiment-driven. Trump knows that crypto traders, especially retail traders, react instantly to words, tweets, interviews, and rumors. And this makes Bitcoin a political instrument, not just a financial one. His strategy is not to make traders rich, but to make markets respond to him. When Trump talks about regulation or American dominance in crypto, the market shakes not because the rules changed, but because traders fear what might change next. This fear creates liquidations and resets, which allow large institutions to re-enter at better prices. Trump is not against traders, but he's not on their side either. His loyalty is to institutions, banks, hedge funds, and national interest. Retail traders are expendable in his system unless they are disciplined, informed, and patient. Under Trump, crypto trading becomes less about hype and more about timing structure and risk control sudden spikes caused by Trump statements are often traps because they are driven by emotion, not fundamentals. Smart traders wait for confirmation after the noise settles. Trump's ideal crypto market is one where large players operate, openly pay taxes, and follow regulations while small traders participate, but do not control direction. This is why he supports regulation that increases barriers to entry, like KYC reporting and compliance. Dangerous for gamblers, but more profitable for strategic traders who understand cycles. Trump also understands that crypto gives Americans an alternative store of value during inflation, but he does not want it to replace the dollar. He wants Bitcoin to sit below the dollar, not above it. That means policies will aim to cap extreme upside while preventing total collapse. This balance creates long consolidation phases followed by sudden controlled rallies. For traders, this means patience matters more than speed, and capital preservation matters more than leverage. Trump will use crypto as a campaign talking point, not to promise moonshots, but to promise control, leadership, and protection, which calms institutions but frustrates dream-driven retail traders. This is why Bitcoin under Trump feels manipulated, because it is not free market anymore. It is a politicized asset reacting to power statements more than technical signals. And traders who fail to adapt to this reality. Trump's approach to Bitcoin also includes messaging and narrative control. He knows that perception drives price more than fundamentals. In crypto market, statements about innovation, regulation, or national security move billions because traders react emotionally and not rationally. When Trump praises blockchain technology, the market reacts with hope. When he warns about scams or regulations, the market panics. This emotional swing is exactly what he wants because it gives him leverage in both political and financial arenas. Trump wants the American people to feel that he is in control of crypto, even if the actual mechanics are managed by institutions. This control perception is more powerful than any law or executive order. It shapes trading behavior, influences investor confidence, and dictates market cycles. Trump also understands international implications. Bitcoin is global, and China, Russia, and Europe all have significant influence over its price and adoption. Trump's strategy is to make American participation mandatory through regulation while allowing global players to interact so long as they respect U.S. financial rules. This creates a semi-controlled environment where U.S. dominance is asserted without isolating the market completely. For crypto traders, this means American platforms, exchanges, and banks to benefit from trading fees, custody solutions, and compliance services, while retail traders are incentivized to remain disciplined and patient. Under Trump, crypto adoption is a tool of economic nationalism, not free market utopia. This is why announcements about Bitcoin ETFs, custody laws, or federal oversight carry more weight than technical charts, because the market now reacts to policy expectations, and Trump statements are interpreted as signals for policy direction. This dynamic transforms Bitcoin trading from a pure investment into a geopolitical and regulatory game, where winning requires understanding Trump's mindset, macroeconomics, and institutional behavior all at the same time. For traders, this means ignoring Trump is as dangerous as ignoring price trends. Every tweet, interview, or remark can trigger rapid movements and create opportunities if you know how to read the signals correctly. Patience, discipline, and awareness. Trump's influence on Bitcoin trading also extends to taxation and legal compliance. He wants every transaction, large or small, to eventually be visible to regulators, not because he wants to punish traders, but because control generates stability for institutions and revenue for the government. This means exchanges must report trades, wallets must comply with KYC and AML standards, and large traders cannot hide capital offshore for speculative purposes. Trump views these rules as protective measures. Not limitations, they ensure that the U.S. financial system retains influence over a decentralized global asset for traders. This creates both risk and opportunity. Short-term volatility may spike when compliance measures are announced, but long-term it ensures that American platforms dominate trading volume. This also changes trader behavior. Sudden rallies or crashes are often reactions to rumored enforcement, not market fundamentals. Disciplined traders anticipate these rules and structure entries and exits around expected regulatory shifts. Trump also understands the narrative around inflation. Bitcoin is often called digital gold, and its use as an inflation hedge is central to retail adoption. He allows controlled narratives about scarcity and adoption to stimulate interest, but he balances this with messaging that emphasizes dollar primacy and government oversight. This dual narrative creates waves of optimism and caution that drive trading opportunities. Simultaneously, Trump's policy signals are cyclical, linked to elections, legislation, and global events. Traders who monitor these cycles can prevent an unsustainable bubble, while every bearish warning is timed to reduce panic that could destabilize institutional holdings. Bitcoin under Trump is thus a controlled roller coaster, not a free ride. The ride exists to benefit strategic and institutional players while forcing retail traders to learn discipline, patience, and timing, or risk losing capital in emotional reactions. This makes Bitcoin trading a psychological game as much as a financial one. Understanding the balance of power between institutions, retail traders, and government regulation is essential for anyone planning to trade under Trump's influence, and ignoring this dynamic is the fastest way to lose money. Trump also views Bitcoin as a tool for political influence and messaging. He knows that by mentioning crypto in speeches, interviews, or tweets, he can energize certain voter groups, particularly young investors, tech enthusiasts, and retail traders. This political leverage is as valuable to him as the economic leverage it creates. When Trump speaks positively about Bitcoin adoption or innovation, it signals opportunity, but it also signals that the market must operate within American rules. He does not support unchecked speculation or unregulated platforms because they weaken his control and reduce the political impact of his statements. Instead, he prefers a market that appears free to retail traders but is carefully guided by policy and compliance for traders. This creates a landscape where news cycles dictate price swings. Trump's tweets can trigger surges because traders perceive institutional alignment or regulatory approval, even if no actual law has changed. Conversely, warnings about scams or enforcement cause immediate liquidation events that reset positions in favor of big players. This controlled volatility benefits those who understand the signals and penalizes impulsive traders. Trump also sees Bitcoin as a geopolitical instrument. He knows that global adoption influences foreign policy, and that by shaping American participation, he can assert economic dominance without direct confrontation. This is why he emphasizes regulation, education, and American platforms while allowing foreign investors to participate under constraints. It keeps the U.S. financially relevant and politically influential. The result is that Bitcoin under Trump is not purely an investment. It is a reflection of policy, power, perception, and timing for traders. This requires constant attention to political statements, macroeconomic trends, and global adoption rates. Ignoring these factors is as dangerous as ignoring price charts. The market reacts first to fundamentals. Understanding this sequence allows disciplined traders to profit from volatility while avoiding traps created by impulsive retail behavior. Trump's ultimate goal is control, not price direction, and recognizing the distinction changes the way one trades Bitcoin completely. Trump's stance on Bitcoin also reshapes the psychology of long-term investors versus short-term traders. He understands that confidence builds markets, but fear moves them faster, and his communication style deliberately balances both long-term assurance and short-term uncertainty, this keeps investors committed, while forcing traders to constantly reassess risk. Trump does not promise explosive upside. He promises survival. Leadership and structure, which appeals to institutions, pension funds, and regulated investment vehicles. This is why whenever Trump hints at clearer rules or American leadership in crypto, long-term holders feel safer, while short-term traders experience sudden volatility caused by position adjustments, leverage reduction, and liquidation cascades. This environment rewards those who think in cycles rather than moments. Bitcoin under Trump moves less on organic hype and more on scheduled catalysts such as elections, regulatory announcements, congressional hearings, and global economic data. Traders who align their strategies with these timelines reduce risk significantly. Trump also knows that crypto markets amplify narratives faster than traditional markets. So he uses simple, strong statements that are easy to interpret and hard to ignore. These statements do not always reflect immediate policy action, but they shape expectations, which is enough to move price. This creates an environment where anticipation becomes more powerful than execution for traders. This means entering positions before clarity and exiting before consensus becomes critical. Trump's influence also pushes traders towards safer practices, less leverage, better capital management, and higher awareness of macro narratives than in free hype cycles. This does not eliminate opportunity. It filters participants. Bitcoin becomes a market where informed, disciplined traders can still win while emotional traders are gradually pushed out. Trump's approach does not destroy the decentralized spirit of Bitcoin, but it cages it within political reality, and those who understand this balance can trade with clarity instead of hope. Trump's relationship with Bitcoin also reflects his broader philosophy of negotiation. He often creates tension first and clarity later, because tension reveals weakness in opponents, and markets behave the same way. When Trump introduces uncertainty around crypto regulation, many weak positions collapse, quickly revealing where leverage is excessive and where liquidity is fragile. This process allows stronger players to consolidate positions at better prices. Trump understands that markets need periodic stress to remain under control, and Bitcoin's open global nature makes it ideal for this kind of pressure testing. He is not trying to eliminate volatility. He is shaping it to serve political and institutional goals for traders. This means that panic-driven sell-offs are rarely the end of the story. They're usually the beginning of redistribution phases where capital moves from emotional hands to strategic ones. Trump's messaging also discourages blind loyalty to Bitcoin as an ideology. He does not sell decentralization as freedom. He frames it as innovation under oversight. This framing changes how the public interacts with crypto, shifting focus from rebellion to participation. Traders who cling to the idea of total freedom often misread Trump signals and get caught in aggressive reversals because they expect ideological support rather than strategic control. Under Trump, Bitcoin trades less like a revolution and more like a regulated commodity influenced by power statements, policy hints, and institutional flows. This does not remove upside, but it changes timing. Rallies are often slower and more controlled, while drops are faster and sharper, designed to clean excess leverage from the system. Traders who survive in this environment are those who treat Bitcoin as a strategic asset, not a belief system, and who understand that political power now plays a direct role in price discovery. Ignoring this reality leaves traders exposed to sudden shifts that appear random but are actually responses to predictable political behavior. Trump also understands that Bitcoin represents a generational shift in how people think about money, and he wants to be seen as the leader who managed that shift rather than fought it. He positions himself as tough, but practical, someone who does not fall for hype, but does not block innovation. Either this image matters because it reassures older investors while still appealing to younger traders who fear losing opportunity under strict regulation. Trump's messaging is carefully balanced. He criticizes chaos, scams, and unregulated platforms while praising technology efficiency and American innovation. This creates a narrative where Bitcoin is acceptable as long as it strengthens the system rather than challenges it. For traders, this means sentiment can flip quickly because both bullish and bearish interpretations exist at the same time. A positive statement about innovation can push price up, while a warning about regulation can pull it down within the same cycle. This duality creates choppy markets where over-trading becomes the biggest enemy. Trump's influence also encourages institutional accumulation during quiet periods because large players understand that regulation reduces existential risk for Bitcoin, even if it increases short-term friction. While retail traders often panic during these phases, institutions slowly build positions expecting long-term stability. This divergence in behavior explains why Bitcoin sometimes moves sideways for long periods before sudden breakouts. Trump's environment rewards patience and planning, not excitement, and impulse. Traders who align with this reality focus on risk management, position sizing, and macro awareness rather than chasing every headline. Bitcoin under Trump becomes a test of emotional control as much as market knowledge, and those who master both can still extract consistent gains from the controlled volatility he creates. Trump's approach to Bitcoin also reveals how he views power in financial systems. He believes real power comes from influence over infrastructure, not ideology. This is why he supports frameworks that bring crypto exchanges, custody services, and payment rails under American jurisdiction. Once infrastructure is controlled, price becomes manageable and behavior becomes predictable for traders. This means that sudden moves are often linked to infrastructure-related news, such as exchange approvals, compliance crackdowns, or institutional partnerships, rather than purely technical breakouts. Trump understands that when infrastructure is centralized under regulation, decentralized assets lose some unpredictability but gain legitimacy and longevity. This trade-off favors long-term adoption over short-term freedom. Traders who recognize this shift stop expecting explosive parabolic runs and instead look for structured trends and policy-driven momentum. Trump also uses Bitcoin as a bargaining chip in broader economic negotiations, hinting at support or pressure depending on trade relationships, inflation concerns, or geopolitical tensions. This means Bitcoin can react not just to crypto news, but to unrelated political events, because it has become part of the macro conversation. Under Trump's influence, Bitcoin behaves like a hybrid asset, part commodity, part technology, part political signal. For traders, this complexity increases risk, but also increases opportunity for those who track multiple variables simultaneously. Ignoring macro signals becomes increasingly dangerous because charts alone cannot capture political intent. Trump's market influence rewards those who think strategically and punishes those who trade emotionally. Bitcoin is no longer just about supply and demand. It is about who controls the narrative, infrastructure, and timing. And under Trump, those factors often matter more than technical indicators. Trump's interaction with Bitcoin also impacts how risk is priced across the entire crypto market, not just Bitcoin itself. When Trump speaks about regulation dominance or control, altcoins often react more violently because they lack Bitcoin's institutional backing and narrative strength. This creates a rotation effect where capital temporarily exits high-risk assets and moves into Bitcoin or stable instruments. Traders who understand this dynamic use Bitcoin as a hedge during politically charged periods while avoiding overexposure to speculative tokens. Trump's environment increases correlation between crypto assets in traditional markets, especially U.S. equities, bonds, and the dollar. Because policy expectations link them together for traders, this means cross-market awareness becomes essential. Bitcoin no longer moves in isolation. Sudden shifts in treasury yields, inflation data, or geopolitical news can amplify Trump-driven narratives and accelerate price movements. Trump's communication style also compresses time frames. Reactions that once took weeks now happen within hours because markets have learned to respond instantly to political cues. This increases intraday volatility and punishes slow decision making. Trump also indirectly encourages institutional products like ETFs, custody services, and regulated derivatives, which deepen liquidity but also introduce sophisticated players who exploit retail behavior. This makes Bitcoin trading more competitive and less forgiving. Under Trump's success depends on preparation, not prediction. Traders who plan scenarios, manage risk, and remain flexible can survive and grow, while those who rely on fixed beliefs about bullish or bearish outcomes struggle to adapt. Bitcoin under Trump is not a simple bet on price direction. It is a continuous game of positioning around power statements, policy cycles, and institutional behavior. Understanding this reality transforms trading from gambling into strategy. Trump's presence in the Bitcoin narrative also forces traders to rethink time horizons. He operates on long political cycles, while markets often trade on short emotional impulses. This mismatch creates repeated opportunities where price overreacts to statements that have slow or indirect policy impact. Trump may hint at future regulation or support, but actual implementation can take months. During this gap, markets swing wildly, creating false breakouts and fake breakdowns. Traders who understand this dynamic avoid chasing immediate moves and instead position gradually as sentiment peaks or collapses. Trump's style encourages speculation but rewards patience because clarity always arrives later after damage has already been done to emotional positions. He also understands that uncertainty keeps attention focused, and attention equals influence. By keeping Bitcoin in constant discussion, he ensures it remains politically relevant without committing to extreme positions. This keeps both supporters and critics engaged, which sustains volatility for traders. This environment favors those who scale in and out rather than all-out decisions. Bitcoin under Trump also becomes a tool for testing market resilience. Every controversial statement acts like a stress test, revealing how much leverage is in the system and where weak hands are concentrated. Traders who study these reactions gain insight into future risk zones and liquidity pockets. Trump's influence turns Bitcoin trading into a game of anticipation rather than reaction, where success depends on reading intent, not just words. Markets do not move because Trump speaks, they move because traders misinterpret what his words actually mean. Understanding that difference separates professionals from gamblers. Trump's strategy with Bitcoin also includes shaping who benefits most from the market. He prefers systems where institutions build foundations and retail traders provide liquidity. This structure mirrors traditional finance and allows control without eliminating participation. Bitcoin under this model becomes a layered market where access determines advantage. Institutions receive clarity early through policy discussions, lobbying, and regulatory signals, while retail traders react later through headlines and price movement. This information gap creates repeated cycles of accumulation and distribution. Trump does not openly state this, but his actions support frameworks that favor large compliant players. For traders, this means success requires aligning with institutional behavior rather than fighting it. Watching volume structure, open interest, and funding rates becomes more important than chasing social media sentiment. Trump also encourages the narrative of safety and legitimacy around Bitcoin to attract conservative capital, retirement funds, and corporate treasuries. This capital stabilizes price floors, but also slows explosive upside, creating long grinding trends instead of fast pumps. Traders who adapt to this reality focus on trend following and mean reversion rather than moon chasing. Trump's approach turns Bitcoin into a strategic reserve style asset within a regulated ecosystem rather than a rebellion against it. This transformation changes trader psychology, forcing a shift. From excitement to professionalism, those who refuse to adapt often complain that the market feels manipulated, while those who adapt quietly benefit from predictable institutional cycles. Trump's influence ultimately pushes Bitcoin toward maturity, and maturity rewards discipline, not emotion. Trump's view on Bitcoin also connects to his stance on national security and surveillance. He believes any system that moves large amounts of value must be observable to prevent crime, terrorism, and capital flight. This belief drives his support for stricter reporting requirements, wallet monitoring, and exchange oversight. While he may frame these measures as protection, they also reinforce state visibility over financial flows. Bitcoin under this framework is tolerated as long as it does not undermine national security priorities for traders. This means privacy-focused narratives often face pressure during Trump-driven cycles, and assets associated with anonymity experience heightened risk. Bitcoin survives because it is transparent and traceable at scale, making it compatible with surveillance-based oversight. Trump's influence therefore shapes which crypto narratives thrive and which struggle. Traders who understand this dynamic avoid overexposure to themes that conflict with regulatory visibility. Trump also recognizes that global confidence in American markets depends on perceived order and enforcement. Allowing uncontrolled crypto growth could weaken that confidence. His approach reassures international investors that U.S. markets remain disciplined even as innovation continues. This balance attracts foreign capital into compliant channels, strengthening American financial leadership. For Bitcoin traders, this translates into stronger long-term support zones, but sharper short-term enforcement shocks. Sudden investigations or regulatory warnings can trigger fast sell-offs followed by slow recoveries. Understanding this pattern allows traders to avoid panic selling and instead look for structural opportunities after fear peaks. Trump's Bitcoin policy is not about freedom, it is about controlled integration, and those who trade within that reality gain an edge over those who trade against it. Trump's influence on Bitcoin also affects global market leadership. He wants the United States to be the primary hub for crypto innovation, trading, and regulation, rather than allowing leadership to shift to offshore jurisdictions. By promoting regulated American exchanges, custody services, and financial products, he pulls liquidity back into U.S. control channels. This strategy reduces the power of unregulated foreign platforms and strengthens American oversight for traders. This means that liquidity increasingly concentrates during U.S. market hours and reacts more strongly to U.S. political and economic news than before. Trump understands that controlling where liquidity lies gives indirect control over price behavior without needing direct intervention. Bitcoin, under this structure, becomes sensitive to U.S. election cycles, Federal Reserve policy, and domestic legislation. Traders who align their activity with these time zones and events gain an advantage, while those who ignore them face unpredictable volatility. Trump's approach also creates friction for traders. Attempting regulatory arbitrage, moving funds across borders, becomes more complex and costly, which discourages rapid capital flight. This stabilizes price floors, but intensifies short-term shocks. When enforcement headlines appear, Bitcoin trading thus shifts toward higher quality volume, fewer but larger participants, and slower but more deliberate trends. Trump's model favors predictability over chaos, but uses controlled chaos to maintain leverage. Traders who survive in this environment are those who respect political gravity and trade with awareness of where power and liquidity intersect. Trump also understands that Bitcoin represents a challenge to traditional banking, but he does not seek to destroy banks. He seeks to reposition them. He supports crypto integration that allows banks to offer custody, trading, and settlement services, turning a potential threat into a revenue stream. This strategy keeps financial power centralized while allowing technological progress for traders. This means increased institutional participation, deeper order books, and reduced risk of systemic collapse. But it also means tighter spreads and more competition, making easy profits harder to find. Trump's model gradually shifts Bitcoin from a retail-dominated market into an institutionally mediated one, where pricing efficiency increases and manipulation becomes more subtle rather than obvious. Traders who rely on simple patterns or outdated strategies struggle, while those who evolve toward data-driven and macro-aware approaches adapt successfully. Trump's approach also encourages collaboration between regulators, banks, and crypto firms, which reduces existential fear but increases compliance complexity for traders. This environment rewards professionalism, record keeping, and strategic planning rather than impulsive speculation. Bitcoin, under Trump, becomes less about rebellion and more about integration, and integration favors those who treat trading as a business, not a bet. Understanding this shift is essential for long-term survival in the market. Trump's Bitcoin strategy also leverages media and public perception. He knows that the narrative around crypto can move markets as much as actual policy. This is why tweets, interviews, and statements are carefully timed to create maximum attention without immediate implementation. The result is volatility driven by expectation, not execution. Traders who react emotionally to every headline risk being caught in artificial swings, while those who analyze intent and context gain advantage. Trump also uses comparisons to traditional finance to frame Bitcoin as a manageable asset rather than a chaotic experiment. This reassures institutional investors and conservative retail traders, while signaling that wild speculation will be corrected through policy or market influence. For traders, this creates a dual layer of opportunity, one layer driven by headline reactions and short-term sentiment, and another layer driven by strategic anticipation of policy and regulatory moves. Understanding both layers allows disciplined traders to extract consistent gains, even in turbulent conditions. Bitcoin under Trump is therefore a game of psychology, macro awareness, and positioning rather than simple buy and hold sentiment. The market reacts first to perceived power dynamics, and only later to fundamentals. Price movements often overstate immediate implications, creating repeated cycles of opportunity for those prepared to read between the lines. Trump's influence on Bitcoin also creates a climate where regulatory rumors and policy hints become as important as actual news. Traders learn to treat every statement, interview, or tweet as a potential market catalyst, because uncertainty itself is a tool Trump wields deliberately. This means short-term volatility is amplified and rapid price swings occur even before any rules are enforced. Experienced traders anticipate these moves by analyzing context, timing, and historical patterns rather than reacting emotionally. Retail traders often chase spikes or panic sell during sudden headlines, while strategic traders wait for confirmation or fade overreactions. Trump also emphasizes American leadership in crypto adoption, creating cycles where institutional investors accumulate during periods of public skepticism or caution. These accumulation phases build strong support zones that stabilize Bitcoin over time, but may appear stagnant to impatient traders. Trump style favors those who think in cycles rather than isolated moves. He effectively turns Bitcoin trading into a game of political timing, macro observation, and strategic positioning. Traders who understand this can profit consistently, while those who ignore the political layer are vulnerable to sudden sharp movements. Bitcoin under Trump is therefore not purely a financial asset, but a reflection of power, perception, and global influence, requiring a multidimensional trading approach. Trump's approach to Bitcoin also changes the way leverage and risk management are viewed by traders under his influence. Sudden statements about regulation, enforcement, or adoption create rapid shifts in margin requirements, liquidation levels, and funding rates. This forces traders to adapt quickly or suffer losses. He indirectly encourages more conservative risk management, smaller position sizes, and attention to macro signals, because reckless exposure is punished faster and harder than in normal markets. This environment rewards preparation discipline, and patience over impulsive speculation. Trump's strategy also creates predictable cycles of fear and greed. He rarely acts without purpose. Each wave of panic or optimism is tied to a larger narrative about policy, national security, or American leadership. Experienced traders can anticipate these cycles, scaling positions in and out rather than guessing based on emotion. Bitcoin under Trump becomes a market where understanding political timing, institutional positioning, and narrative flow is more important than short-term technical patterns. Traders who embrace this multi-layered approach gain consistent opportunities, while those who ignore it remain reactive and exposed to losses. This makes success in a market less about luck and more about reading the broader landscape of power, policy, and psychology. Trump's influence on Bitcoin also highlights the importance of patience and scenario planning. Traders can no longer rely solely on charts or social sentiment. They must integrate political events, regulatory expectations, and macroeconomic data into their strategies. Sudden announcements from Trump or his allies can trigger rapid moves, but often the real impact unfolds over weeks or months. Understanding the lag between statements and enforcement allows disciplined traders to position ahead of the crowd rather than reacting after the fact. Trump also encourages a market hierarchy where institutional players and compliant traders have advantages through early information, structured products, and regulatory clarity. Retail traders who adapt by observing trends, cycles, and political signals can still profit, but impulsive participants are repeatedly punished. Bitcoin under Trump is therefore a market shaped by power, policy, and narrative flow, not just supply and demand. Every reaction is a reason rooted in control, timing, and leverage. Those who recognize this can navigate volatility successfully, while those who ignore it remain vulnerable to sudden losses. Trump's overall impact on Bitcoin completes the transformation of the market into a politically influenced ecosystem where price, sentiment, and volatility are directly tied to statements, policy hints, and institutional positioning. He does not seek to destroy or fully liberate Bitcoin, but to integrate it within a controlled framework where American influence remains dominant. This creates repeated cycles of opportunity for disciplined, informed, and patient traders while punishing impulsive, emotional participants. Understanding Trump's mindset becomes as important as reading charts or news because his words often act as catalysts that move billions in value. Bitcoin under Trump is no longer just a decentralized currency or speculative asset. It is a reflection of geopolitical power, regulatory intent, and market psychology. Success requires multi-layered awareness, strategic positioning, and the ability to anticipate both narrative shifts and institutional moves. Traders who adapt to this reality can extract consistent gains from controlled volatility, while those who ignore it remain exposed to unpredictable swings. Ultimately, Bitcoin trading under Trump becomes a game of timing, influence, and understanding the intersection of power and capital rather than a simple bet on price direction. Trump's interaction with Bitcoin also impacts how risk is priced across the entire crypto market, not just Bitcoin itself. When Trump speaks about regulation dominance or control, altcoins often react more violently because they lack Bitcoin's institutional institutional backing and narrative strength. This creates a rotation effect where capital temporarily exits high-risk assets and moves into Bitcoin or stable instruments traders who understand this dynamic use Bitcoin as a hedge during politically charged periods while avoiding overexposure to speculative tokens. Trump's environment increases correlation between crypto assets and traditional markets, especially U.S. equities, bonds, and the dollar, because policy expectations link them together for traders. This means cross-market awareness becomes essential. Bitcoin no longer moves in isolation. Sudden shifts in treasury yields, inflation data, or geopolitical news can amplify Trump-driven narratives and accelerate price movements. Trump's communication style also compresses time frames reactions that once took weeks now happen within hours, because markets have learned to respond instantly to political cues. This increases intraday volatility and punishes punishes slow decision, making Trump also indirectly encourages institutional products like ETF custody services and regulated derivatives, which deepen liquidity but also introduce sophisticated players who exploit retail behavior. This makes Bitcoin trading more competitive and less forgiving under Trump's success depends on preparation, not prediction traders who plan scenarios, manage risk, and remain flexible can survive and grow, while those who rely on fixed beliefs about bullish or bearish outcomes struggle to adapt. Bitcoin under Trump is not a simple bet on price direction. It is a continuous game of positioning around power statement, policy cycles, and institutional behavior. Understanding this reality transforms trading from gambling into strategy. Trump's approach to Bitcoin also reveals how he views power in financial systems. He believes real power comes from influence over infrastructure, not ideology. This is why he supports frameworks that bring crypto exchanges, custody services, and payment rails under American jurisdiction. Once infrastructure is controlled, price becomes manageable and behavior becomes predictable for traders, this means that sudden moves are often linked to infrastructure-related news, such as exchange approvals, compliance crackdowns, or institutional partnerships rather than purely technical breakouts. Trump understands that when infrastructure is centralized under regulation, decentralized assets lose some unpredictability but gain legitimacy and longevity. This trade-off favors long-term adoption over short-term freedom traders who recognize this shift, stop expecting explosive parabolic runs and instead look for structured trends and policy-driven momentum. Trump also uses Bitcoin as a bargaining chip in broader economic negotiations, hinting at support or pressure depending on trade relationships, inflation concerns, or geopolitical tensions. This means Bitcoin can react not just to crypto news, but to unrelated political events, because it has become part of the macro conversation. Under Trump's influence, Bitcoin behaves like a hybrid asset, part commodity, part technology, part political signal for traders. This complexity increases risk, but also increases opportunity for those who track multiple variables simultaneously. Ignoring macro signals becomes increasingly dangerous because charts alone cannot capture political intent. Trump's market influence rewards those who think strategically and punishes those who trade emotionally. Bitcoin is no longer just about supply and demand. It is about who controls the narrative, infrastructure, and timing. And under Trump, those factors often matter more than technical indicators. Trump's relationship with Bitcoin also reflects his broader philosophy of negotiation. He often creates tension first and clarity later, because tension reveals weakness and opponents and markets behave the same way. When Trump introduces uncertainty around crypto regulation, many weak positions collapse, quickly revealing where leverage is excessive and where liquidity is fragile. This process allows stronger players to consolidate positions at better prices. Trump understands that markets need periodic stress to remain under control, and Bitcoin's open global nature makes it ideal for this kind of pressure testing. He is not trying to eliminate volatility. He is shaping it to serve political and institutional goals for traders. This means that panic-driven sell-offs are rarely the end of the story. They're usually the beginning of redistribution phases where capital moves from emotional hands to strategic. Once Trump's messaging also discourages blind loyalty to Bitcoin as an ideology. He does not sell decentralization as freedom. He frames it as innovation under oversight. This framing changes how the public interacts with crypto, shifting focus from rebellion to participation traders who cling to the idea of total freedom often misread Trump signals and get caught in aggressive reversals because they expect ideological support rather than strategic control. Under Trump, Bitcoin trades less like a revolution and more like a regulated commodity influenced by power statements policy. Hence, and institutional flows, this does not remove upside, but it changes timing. Rallies are often slower and more controlled, while drops are faster and sharper, designed to clean excess leverage from the system. Traders who survive in this environment are those who treat Bitcoin as a strategic asset, not a belief system, and who understand that political power now plays a direct role in price discovery, ignoring this reality leaves traders exposed to sudden shifts that appear random but are actually. Trump also views Bitcoin as a tool for political influence and messaging. He knows that by mentioning crypto in speeches, interviews, or tweets, he can energize certain voter groups, particularly young investors, tech enthusiasts, and retail traders. This political leverage is as valuable to him as the economic leverage it creates when Trump speaks positively about Bitcoin adoption or innovation. It signals opportunity, but it also signals that the market must operate within American rules. He does not. Support unchecked speculation or unregulated platforms because they weaken his control and reduce the political impact of his statements. Instead, he prefers a market that appears free to retail traders, but is carefully guided by policy and compliance for traders. This creates a landscape where news cycles dictate price swings. Trump's tweets can trigger surges because traders perceive institutional alignment or regulatory approval, even if no actual law has changed. Conversely, warnings about scams or enforcement cause immediate liquidation events that reset positions in favor of big players. This control volatility benefits those who understand the signals and penalizes impulsive traders. Trump also sees Bitcoin as a geopolitical instrument. He knows that global adoption influences foreign policy, and that by shaping American participation, he can assert economic dominance without direct confrontation. This is why he emphasizes regulation, education, and American platforms, while allowing foreign investors to participate under constraints. It keeps the U.S. financially relevant and politically influential. The result is that Bitcoin under Trump is not purely an investment. It is a reflection of policy power perception and timing for traders. This requires constant attention to political statements, macroeconomic trends, and global adoption rates. Ignoring these factors is as dangerous as ignoring. Price charts. The market reacts first to policy signals and then to narratives than in free hype cycles. This does not eliminate opportunity. It filters participants. Bitcoin becomes a market where informed, disciplined traders can still win while emotional traders are gradually pushed out. Trump's approach does not destroy the decentralized spirit of Bitcoin, but it cages it within political reality, and those who understand this balance can trade with clarity instead of hope.